Good evening, my fellow Riz Elite members. This is Chris with Riz International, and I have the man, the myth, the legend, the Riz with me tonight. Riz, how you doing tonight, buddy?
Doing good, sir. Thank you for having me on. It's been a few weeks, I think, since I was last on, and wow, time is flying by. I can't believe it. We're actually in Q2 now already.
I know it's crazy. I feel like the first quarter just flew by.
Yes, it flew by like pretty much every quarter, but especially this year. I don't know what it is about 2021. Maybe it's after everything of last year. I think it's fair to say. I mean, at least for me, 2021's been kind of like a 2020 part two kind of situation. I think many will probably agree. Um, but you know what? I think at least we're kind of rolling in, and to most of us, at least in North America and maybe some parts of Europe, we are in the summer months, hopefully soon. So at least there's that to look forward to.
Dude, absolutely no. And speaking of flying by, let's look here at the S&P 500, and looks to me like we've hit a new all-time high on the S&P 500. We are flying high at this point. Riz, what do you make of this? I mean, the market just seems to be unstoppable at this point. I mean, we have the dips, and then the rebounds come back, and it just rebounds stronger than ever. What are you making of this market environment right now?
Yeah, it's a quite a contrast. Because we know the S&P 500, obviously a broader, U.S. market with so many different different kinds of companies, not just tech and not just, consumer staples and not just any individual sector, but so many. And ultimately, I'm just positively surprised that, at least the markets have been continuing to chug along as despite this sort of inflation and sort of bond yields sort of wall of worry that we've continued to have over the last month and a bit. With that said, not everything is sunshine and rainbows. In fact, if we pull over, Chris, to the IX, sorry, what am I looking? IX. So IXIC. My apologies. So this is the NASDAQ Composite Index on TradingView. This is a bit of a different story, right? Whereas we've seen that kind of lower volatility in the S&P 500 kind of line just chugging along, the NASDAQ has had a bit of a rough of a take over the last month and a half or so, with dropping from all-time highs. And the NASDAQ, for those of you who are not initiated, is the broader tech index, right? And the Nasdaq Composite is really inclusive of pretty much all tech-based companies, right? Ranging from Microsoft and everything from that point to even some smaller mid caps as well. So we have seen a big drop. In fact, from peak to the low point, I think around 12,400 on the index. I think that's as a percentage drop. I think probably we dropped about nearly 10%, I think, from the high in a matter of, I think, less than a month, right? So yeah, take a look at that. Chris is giving his exact numbers, about 12%, all right, from nearly all-time highs to the kind of trough, the bottom there, at least, so to speak, for the last month. And that took about 14 trading days, right? 20 days, but 14 bars. 14 trading days is where the NASDAQ dropped over 12%. So there's a reason why people, kind of portfolios were hammered. Even though the S&P 500 dipped a bit, it was nowhere near a big of a correction as this was, right? The S&P 500, I think, for this during the same time frame, probably dropped half of that, so about 5 or 6%, right? So a lot of people are like a bit taken aback, rightfully so, when I say the U.S. market is at all-time highs, because their portfolios sure as hell don't seem like it, right? Their volatility sure as hell doesn't seem like it, and in fact, many of their individual holdings may be down, and that's okay. These are not things that anyone is immune to, not even me. In fact, I have some positions that are also in the red, and I continue to carry them because they're part of my thesis, and I continue to give them time and let them work. The trouble comes during this kind of time and this kind of, I would say, move, especially in a very, very toppy and frothy sector, which is broadly speaking, tech, especially certain pockets of tech where we have the EV plays, the solar companies, we've had SPACs, and them dropping approximately 50% off of their highs does not surprise me at all. In fact, those of you that have been in Elite have been following me and what kind of I trade and my ethos and the kind of commentary I've been providing would know that I, I generally stayed away from all these kinds of companies, not because there wasn't money to be made, but just because I just didn't feel comfortable with it, right? I just didn't gravitate towards those companies. And it's fine if someone else traded it and we made money, maybe they didn't, whatever. But ultimately, I find that, you know what, I was better off suited not to trade those because I was very well insulated, very well kind of protected before all this happened. And in fact, the companies I bought while this was going on, many of them went up during the market, drop off in the last month and a bit. So it goes to show you, even when markets are dropping, even when a certain sector is getting demolished and the average person may be hurting, you could still do well. In fact, one of my portfolios did significantly well, and it is actually near all-time highs, similar to the S&P 500, right? Because of the balance and the diversification and not solely being in these crazy, frothy, speculative positions, right? So apart from my meandering, continuing on with the show, really, I think with the S&P 500, I don't see any reason why we would continue to get like a bigger drop per se, continuing forward. We are going to be keeping an eye on broader economic stuff, but so far last week, so Friday, we had payroll numbers looking great. I think it was Wednesday, we had unemployment, and that too was one of the best numbers in terms of unemployment being at the lowest levels since I think sometime mid last year. So what does that mean? It's less worse. It's still not ideal. We're not at full employment, as we were before the pandemic, but it's less bad, right? And anytime we see something that's less bad, that's considered to be good news, right? Especially in the viewpoint of markets. And remember, markets are always, always, always looking approximately a year out, right? This is classically why the markets were recovering so strongly last year, in April and May and so on and so forth, in the midst of a global unprecedented pandemic, and people were shocked, right? But that's what it is. The markets were looking forward, and it didn't take a genius to realize that, humanity isn't done for. We will continue. We will get through this, and you know what? Guess what? We can figure out how to progress, and we have for the most part, with vaccines and sort of a plan and government spending and keeping rates low. We have sort of seen ourselves through, I think, what is the worst of it. Does this mean the market's not going to drop ever again? No, absolutely not. We'll see pullbacks, of course, but so far so good, especially with some of the infrastructure plan coming along. My only medium term worry, so to speak, and of course this will be the market's worry as well, is the much, I would say, heated and much debatable topic about taxes. And I'm talking about the U.S. federal taxes and new tax plan potentially raising tax rates on people that make over $400,000 a year. And I know there's some talk of plus or minus, maybe people with making over 300 or something too might be affected. But more importantly, how it may impact the corporate rates for companies that are liable to pay taxes for these corporations that are part of the S&P 500. And there is some talk by analysts that maybe if that tax plan in its current form is passed, I don't know if it will be, but if it is in this current form, it could take off approximately 7% off the bottom line. What's the bottom line? The EPS, the earnings of companies on the S&P 500 by an average by 7% for the full year. So that's something to keep in mind, and something that you may not hear people reference in the in social media, because frankly, they don't know what the fuck they're talking about, right? So this is something that, it's something for you to keep in mind, be aware of. I'm not saying, it's doomsday or, everything's going to drop, but I'm just saying this is a medium term uh, kind of worry for me to keep an eye on. All right. At least this way you are more prepared. You don't need to operate off of fear, but something to keep an eye on.
Well, I think it's easy to gloss over something like that because you're like, well, I don't make that type of money, so it doesn't affect me. But, it really does in a different way because of what you mentioned. The hitting these larger companies can, affect your portfolio and the stuff you're trading.
Yeah, absolutely. You know what? Obviously, if the bottom line of any business, for me, I'm not in the U.S., but it would impact me. And you know what? It is what it is. Taxes. I get so many questions about taxes, and it blows my mind. Taxes are not a good thing. Um, I'm not gonna say that I enjoy paying taxes or anyone enjoys paying taxes, and I get kind of the problems with taxes. But ultimately, it's just something that we have to do for the country that we live in, and for the society that we live in, and for the liberties that we get. And I've said this before. Uh, aren't you better off paying taxes if you made money? Remember, you pay taxes if you're making money, especially when it comes to like capital gains or even income tax, right? You're paying taxes because of your income, and I think it's one of the better problems to have. Right. And people always tell me, especially from a trading standpoint, Riz, if I'm trading and I make this much money, I have to pay taxes. I'm like, well, what do you mean? Like, you're gonna pay taxes, but that's if you make money, right? That's if you make money. Ultimately, you have to think that, what? Guess what? We have to look at things from an objective standpoint. We have to live in in a society where we get a lot of liberties, a lot of things where some of people across the world may not, and for that we have to kind of pay our fair share, right? So there's some tax planning stuff that people need to be aware of. Ultimately, you know what? I don't think it's the end of the world. I don't think, you know what? I'm not a fan of paying taxes, but it's something that we have to do to a certain extent, and there's no point kind of fighting that, so to speak.
Absolutely. Sorry for the dog barking there. Can you hear me okay, Riz? Jonathan
I
is
can hear
saying,
you fine. I can hear
okay,
you fine.
okay, cool.
Volume is fine. There's no kind of scratchiness or any kind of glitchiness so far on my end for your voice.
All right. Well, I appreciate that. Yeah, I don't know anybody who likes paying taxes. I'm not, I've not heard of someone saying, "Oh, yeah, it's tax time. Let's go give the government some money." That sounds good. But it's what we got to do. It's what we have to do to live in the world that we live in, and so we just have to kind of know how to deal with it as best we can.
Yeah. Pay your fair share. Pay what you have to. Tax, uh, tax avoidance is tax dodging, tax fraud, all that kind of stuff is illegal. But making sure you're doing the proper tax planning, making sure you are doing that's not illegal. That's part of the law. That's part of the process of making sure you're paying taxes, but the amount that you're supposed to, and no more, no less.
Absolutely. And guys, just get your taxes paid. We always advocate for following the law here. We would never suggest anything illegal or illicit or anything like that. So make sure you're taking care of that because we want everything nice and clean and legal and everybody, still in elite and not in the clink. In any case, let's move on to the breakdown here on the S&P 500. Since we kind of already looked at the NASDAQ, composite, we have the other indices here that we take a look at. Energy is still flying high at this point in financials as well, still making a nice strong push considering where it was last year. Real estate also up, and the S&P 500 itself, represented here by the SPY ETF, up 8.63% on the year. The other indices are, still positive on the year, but just underperforming when compared to the S&P 500. What are you seeing here, Riz? What are, some kind of trends that you're interested in right now with these different sectors?
Yeah, so these sectors of the S&P 500, these are the kind of it's like having a piece of pie, and these are the little pieces, not all of them, but the major pieces that make up the pie, right? And honestly, I don't see any reason why the market can't continue in this direction. I would like to see obviously tech kind of pull back up. It has been the leader over the last, decade, really. But I think, you know what, there is some upside in broader tech sector. Just have to be very picky with what you hold, right? And be very selective in the kind of trades that you take when you are dealing with that sector, because as we know, there's been a big discounting. Simply, and I won't get into the details because I have covered it in the previous videos around bond yields and potential inflation and the impact that it can have not only on broader markets but especially high growth companies with no bottom line profits. They have revenues but no profits at the end of the quarter or the end of the year even, and those kind of companies are significantly impacted. And as we know, many are in the tech sector, so you have to be very careful with what you continue to buy. And then tech sector is not a bad thing. There is some upside there. You just make sure that you're selective, especially when it comes to pharmaceuticals as well and everything really. But the good thing is markets have been trending up, sectors have been trending up, as you can see, and they're all above the 0% line, meaning that all these sectors are up on the year so far. And I know we're only 3 months in, but so far so good. This leads good leading into what is usually a bullish month, okay, based on seasonality and of the year. Usually, okay. I stress the word usually because just because 9 times out of 10, the 10 last Aprils were bullish doesn't mean this is going to be the same key. All we can do is look in the past and history and glean a bit of insight from it, but we can never make a one-to-one conclusion that this is what's going to happen, right? But it does look promising leading into Q2 and into April, as we're already in with the S&P 500 passing that 4,000 mark, and you know what, hitting all-time highs. I do see the Nasdaq also pushing up, so long as we don't get any major events or catalysts or bond yields don't go completely berserk, which I don't see happening. But you know what, I think so far so good.
Listen, guys, I was born in April, so obviously it's going to be a bullish month. That's just all there is to it. So, I know Riz is not saying you can't take that to the bank, but you can take it to the bank of Chris, for whatever that's worth. I can't guarantee you guys any percentages, but, you can take that to the bank. All right, let's go ahead and take a look at some of the asset classes here and kind of talk about that. I want to talk about oil here because there's been a lot of talk of yields and obviously the blockage in the Suez Canal and all the wonderful memes that have come from that. I hope you guys are enjoying that because I think some of them are absolutely hilarious. Probably my favorite one is the Austin Powers meme where he has the little vehicle stuck in the hallway there. That's my personal favorite. But Riz, what's going on with oil here? Because we just made this huge push upwards, and then it just kind of it has fallen off and is consolidating at this point. What's going on with oil right now?
Yeah. So it's holding that equilibrium level of 60. As I said, the 60-65 zone is crucial. What happened actually, I think this week, I think it was Thursday or something, don't quote me on it, but this past week OPEC did convene. They did have a meeting, OPEC plus Russia, and they effectively concluded that over the next 3 months they would like to ease the oil cuts. What does that mean? That means they would like to reverse some of the decreased in output, right? So what they're saying is they'd like to scale up supply, meaning pump a little bit more oil. Remember, OPEC over the last year, especially since last time this year, last year this time around, they cut production significantly to cut the supply and to kind of balance out the oil market. Because if you remember last March, I think it was, we had oil prices go negative, right, briefly, and it was, I think, negative $29 or something. I don't know, like negative 40 even, especially in the futures market at least. And man, it was another black swan event. I've never seen anything like it. Seems to be more and more of those as I get older. But you know what? I think it's not the greatest of news. Obviously, this was not unexpected for OPEC to pump more oil. Why? Because when they pump more oil, they make more money, right? And these countries, OPEC is the oil producing countries, the major oil producing countries, right? And for them to produce more oil, pump more oil out of the ground, sell it means more revenue for their treasuries and their countries. So it's not surprising that they want to up the supply. Why? Because we've seen the major economies, whether it's in Europe or North America, start recovering and in terms of employment, in terms of oil demand, in terms of some travel, and in terms of jobs numbers and everything like that. So you know what? I think overall, I wouldn't be surprised if we continue to see oil kind of move around here. It's really hugging that 50-day moving average, as you can see with that light blue line on Chris's chart. But I think my thesis of $60 to $65 a barrel for now is still in play. It has been, and it's been a slow grind up to get to this point, and I think we can continue to get some consolidation. I have also, for those that have been watching my larger positions in the larger investment account, have trimmed most of my oil producing companies, and not to say that I don't like them at all or whatnot, but I've just trimmed most of them because I've had them for many years. And of course, I'm not saying oil is like, crash or whatnot, but I don't see, oil being kind of what it was 15, 20 years ago, obviously, right? So with that said, I've trimmed some of those oil producing companies, oil exploration, and all the kind of direct exposure to oil via those plays. What I do have still, though, a significant portion that is oil, gas, natural gas pipelines, right? I have pipelines. These are needed because they're not just transporting oil; they're not, transporting natural gas, and natural gas is still going to be needed and is still in high demand, and I don't see any of that going away. So and it also does help that most of these companies are relatively solid, and they do have some decent dividends as well as a bonus. So I do continue to hold those.
I had a question, kind of something about what you said about oil and oil producing companies and countries rather, and things like that. You mentioned it's like, okay, well, if they up supply, basically they mean they turn the faucet on more. They make more money. So if I'm a business owner, I'm sitting here, oh, well, if I just turn this faucet on, I'm going to make more cash. We're just going to turn that faucet on. We're going to leave it running 24/7. Why exactly are they not doing that? Why are they playing with like the supply numbers and how much they're pumping and things along those lines? And why are they doing that?
Yeah, so the great question. So ultimately, supply and demand principles, if they kept, just like last year, if they kept on pumping oil and didn't implement, the supply cuts like they did last year, I would not be surprised if we had oil in a handful of dollars per barrel. Why? Because there's way too much of it out there. There was no place to store it. No one's really using it. Remember last year, in March, April, travel halted, commuting halted. The world stopped on its axis, so to speak. And you know what? They had to do that, and obviously they did, and it was the right move because there was a complete 180, complete reassessment in the demand and usability of something like oil. Oil is used for pretty much everything, and not just cars, and not just for airplanes. Pretty much for many, many, many things, even to the clothes that you wear, right? Even to the products that you use. The plastics that you use. It's petroleum type of byproducts that are used to make that. And ultimately, because everything stopped, the world stopped, they had to step in. If they hadn't, I wouldn't be surprised if we'd see oil price per barrel in a handful of dollars. Now, what happens is they did a good job of keeping that supply, that faucet, so to speak, moving, continuing to run, but running at a low capacity and making sure that it's adjusted based on how much water someone needs, whether they're washing their hands or taking a shower. They're adjusting the flow of that. So they did a good job. Now they're sort of opening up the faucet a little bit more. Why? Because they're thinking that maybe people not only need to wash their hands, they need to take a shower, they're having a bath, maybe they're having fights with super soakers. They're just wanting to have water balloon fights. So they're anticipating people are doing more things, and people are going to be needing more of it, and which is true because we've seen the data with TSA checkpoints and check-ins. We've seen more people traveling. air travel is taking up. We've seen more tourism return. Obviously, with the last week or so, we've seen a little bit of a trickle back with many countries kind of imposing or reimposing some form of lockdowns. But in the broader sense, the trajectory is up, and I'm not surprised at all that they're wanting to open up the faucet a bit more, because the further open the faucet is, the better it is for them. But to a certain extent, if last year, if they stuck to their guns and said, no, we got to keep this faucet going, they were going to just flood the oil market, and it's actually a negative for them. Why? Because price per barrel drops or goes negative, they're losing money, right, by pumping it. So this is why we talk about equilibrium, a good balance between supply and demand. This is for those of us have taken economics or anything of that sort, are very, very, very familiar with, equilibrium pricing.
So, guys, you heard it here first. If OPEC wants to have a water balloon fight, we need to keep an eye on the price of oil, because that will, affect things moving forward. So, that was a great analogy, by the way. All right, let's take a look at the other shiny stuff, and that would be gold. Gold not doing a whole lot here over the last couple weeks after this dip. We're really just kind of trading sideways on gold at this point. It's really just consolidating. Is this basically, Riz, because people are so confident in the market right now because we just keep hitting all-time high after all-time high, or is there something else going on?
Yeah, we've long known that gold is not something that is, I would say, a high-flying asset class. It's something more of a hedge, more of a store of value. We've seen the markets continue to chug along. We've seen gold kind of be there as a safety mechanism, so to speak. And it's really, really, you can see it almost perfectly bounces up from that $1,700 an ounce level as sort of a double bottom. And really, I think this is an area that it can hold. I'm not anticipating it to go back up to 18,500, 19,000 or 1900, 1900 area anytime soon. I just don't think we're in that kind of climate right now for gold to kind of rally like it did last year. Personally, I don't really have any holdings in gold still, although this sort of consolidation and holding of the 1700 area does look good.
Awesome. Thank you for that. All right, let's move to the next part of the webinar where we give some potential trade ideas, and then we can take some questions. I got a question from Discord from one of our members. They wanted us to look at something. But Riz, what are you looking at this week?
Yeah, so I have a couple of trade ideas. Swing trades, obviously, for this week. Again, this is not something that people need to rush out and buy. This isn't, investment advice or anything. Just something that I'm keeping an eye on and some suggestions for people to look into and do their own due diligence on. And the first being CRM. I've mentioned this before. We had a position before, Salesforce, and I think it's looking great after sort of picking up around the, $210 consolidation area, support zone, even to a certain extent, and especially with Thursday's bullish move there. It's looking real nice, and I wouldn't be surprised if it can, continue the 220, 225 area, and if it breaks past that, that can be a very nice momentum push that we need. And again, this is technicals. With the fundamentals, they're also there. They're great. This is obviously a great company, and obviously it's a business-to-business enterprise type of company. It's not something that's really business to direct consumer. And as a result, I do think it can continue to do well, especially in an environment where many businesses are taking their CRM, their kind of customer retention, customer management software, their sort of book of customers. Really, they're looking after it more. They're more paying attention to things perhaps that they weren't, in the last few years, because as we've seen, digital is sort of has gone big. It's really important for companies to innovate, and CRM is kind of there to lead that innovation, pretty much regardless of what industry any business is in. So I do like this company. Fundamentals are good too. The next one, this is a bit of a different one. Remember, I'm kind of diversifying on some of the ideas I give, and I don't want you to just be value stocks or just tech or anything, right? So to change things up a bit, this one people might be a bit surprised, is NIO, NIO. Okay, for those of you not in the know, this is an EV, Chinese EV play. I don't have a position in it. I haven't traded it really. I usually avoid these kind of stocks, if you know my style. But this is looking good for a continuation off the around 30, 35 area, right near that 200-day moving average. Bounce up from that area, and you know what? I think maybe we can see this go around 44, 45. This week, perhaps. Okay. Now, with that said, keep in mind this is not a money making company at the end of the year. They obviously have revenues. They're obviously growing, and of course, as we know, there's a lot of hype and demand for these EV type of companies. It's an electric vehicle maker. Think of it like a competitor, the Tesla of China, so to speak. But I you know what, they lose money every year, so it's not a fundamentally sound company, more of a trade, just solely based on technicals. And I will leave it to you. Personally, I don't have a position, and I haven't traded it before, like I said, for full disclosure. But I'm gonna see how it moves. Maybe take a position, maybe not. For now, I'm just kind of sitting. With that being the second, and now the last suggestion I have for you guys, another more, I would say, technical position is Snow. Okay, Snowflake. Some of you may know this one as being a recent IPO, and there was a lot of buzz around this IPO. With Berkshire, Warren Buffett having positions and blah blah blah, and it had a tremendous run up, even on the first day of listing, but a very volatile first day, right? Back in September last year. But since then, it's had a steady run up and a big gain in November, leading into end of 2020, followed by a big drop. Pretty much a downward trend as can be from then on, and it's given back a significant portion of the gains. From about $430 or so, all the way back down to now 236 area. And guess what? It's really near its kind of, I would say, opening zone when it first got listed, right? So I'm keeping an eye on this. I like that it's able to hold the, above the $200 mark. I like that it's in this kind of 205, 230-ish area. I think it can continue to hold this level, especially with markets kind of trickling up and recovering, so to speak. Remember, this is like a tech kind of company, and although it's not really a money maker, it obviously has some revenues. But I would not keep this as like a long-term hold or something that you're going to buy and bag hold forever. I mean, that's just not something that I would do, but that's up to you. It is purely a technical trade, again, a swing trade, so making sure that we're okay with keeping these positions open for a few days, maybe even a few weeks. All right. And with that said, those are the three kind of stocks that I'm recommending keeping an eye on, watching for this week.
No, it's awesome. Thank you for that insight. All right, so I've got a question here from Discord, from one of our members. It says, in case I can't join on webinar tonight, I was hoping to get your insight on said EV company, Tesla. Let's pull that up here real quick. And they had some specific technical analysis questions. It says, do you see it forming a pennant? We're not going to go into drawing pennants, but that's okay. And then breaking out. Are we at a double bottom? Do you wait and see if it can clear the 700 level? He says he thinks that there's some upside, but are we looking at this too early? Riz, what are your thoughts on Tesla?
Yeah, so I it's something I also looked at this past week. I've been keeping an eye on it. Obviously, one of the largest companies in the S&P 500, and this actually does look more like a double bottom. The 600 zone being a very great holding point. With that said, I would actually consider maybe taking a starter position, and to see if it can run up after Thursday's move. It might be a good entry to kind of get your toes in, maybe half your foot in, so to speak, and then see if it can continue to that 700 level. I think if it passed that 700 level, which is, I think, the shorter term resistance area, then that could be classified as a breakout, a bullish breakout, and maybe we see some further momentum coming in. And at that point, maybe if it clears that 700, you add a little bit more. Again, I don't often condone, nor do I myself add, as it goes up. Usually, I don't average in as it goes up. But this is one of those cases where, you know what, if you have momentum on your side, then it can kind of benefit you a significant part, because just the way this stock moves is very, very momentum oriented, right? So that's my kind of suggestion. Hopefully that answers, what that individual is looking for.
Yeah, no, I think that's a good answer. I think it's definitely has room to go, to say the least. And then we had an early question here I want to take because he said he's going to go on Easter Vigil soon. So hope, Larry, have a wonderful evening if you've left us already. But he wanted us to take a look at BCRX.
Yep. Okay. Yep. This one I've heard of. I haven't traded it, but this is a tricky one. So the setup on this is kind of make or break. Some people will say, maybe it's looking to form a head and shoulders pattern. It's had a significant rally, right? This 2021, or leading into the end of last year, actually from there on, a significant run up. I'm very, very cautious, with these kinds of biotech, biopharma kind of companies. I think if you do have a long position, or if you have a long position, Larry or anyone else, then I would maybe set kind of like a rule or like a line in the sand where you say, you know what, maybe if it goes below $9 area, that solid $9 mark, then I'm out, right? Depending on when you entered or whatnot. Whereas if you are, I wouldn't go and short these kind of things because who knows where they can go. But if you are not in a position yet, you don't have any position yet, I would see if it can hold this $9.95, $10 or $9 region. Anywhere between $9 to $10, if it can hold this, the longer it consolidates, the more I would say there's an opportunity for it to run back up. Right, so it was around $13. It's come back down to around $9.95, nearly $10. Right, what is that? A 30% or so kind of drop from the highs, so to speak, just roughly. And so not all that bad. I wouldn't say it's the greatest entry. It was roughly a $3-4 stock last year. So I would let it find a floor. I would let it consolidate if it can. Around the $9 to $10 area. If you don't have a position, then you have to be fast if you want to get in if it holds it. If you already have a position, make sure you have a line in the sand, because you don't want to bag hold something like this that, I don't know where your entry is, but you don't want to bag hold it going lower and lower and lower. And to yourself, you keep thinking maybe it can get back to where it was, right? That's a fool's errand with these kind of companies.
I have choice words for stocks like this, but I'll save that for another time. I thought there was a good conversation going on in the chat because we mentioned this several times about oil futures going negative here back in 2019. And I think there is a little bit of a misunderstanding with that. The thought that the price of oil actually went below zero and they were just giving it away. Obviously, that wasn't the case. And so, Riz, could you maybe, kind of explain what that was all about and why we had this huge, almost negative $40 candle here on crude futures?
Yeah, so a bit of a oil, futures contracts 101 for you. Again, you'll be another reason for following along, and you won't find this kind of information elsewhere. So what happened on this fateful day in April last year, mid-April last year, was the market all of a sudden panicked based on shutdowns, and it all of a sudden started pricing in the fact that, oh, wait a second, people will not be traveling, people will not be commuting, nothing is going to be happening, the economy is going to be halted globally. And it was a massive sort of catching up in regards to supply and demand, and as a result, pricing of something like oil, which is a hard crude, something that has a cost involved for not only extracting or taking out of the ground, but a cost involved with storage. So when you have a massive, buildup of storage of oil, that before the pandemic, we could see that, X amount of millions of barrels are used every week, right? But all of a sudden, that's not there anymore. All of a sudden, the cost of oil just, keeping it just went up. Factor in the fact that people won't be using it anymore for who knows how long. And of course, it was an overreaction in hindsight. But at that moment, the market had a big sort of, I would say, epiphany that, hold on a second, this isn't a great idea to be carrying, all these kind of uh, all these kinds of not only extractors but storage facilities were overflowed with oil. They had no place to keep it. Imagine something that's already been pumped, that's already kind of taken up capacity. There's a cost to carry this, and now that there's no one wanting to buy it. Well, when you have that on a mass scale, this is what happens. So oil price, it wasn't like you could go to the gas station and then wanting to fill up your truck or your V8 or your V12, I wish in my case. And it's not like the gas station attendee would pay you to fill up your car. Okay, it's not like that. What did happen was the futures contracts. Okay, these companies, these large oil companies, whether it's Exxon, Chevron, Royal Dutch Shell, so on and so forth, they use futures contracts to not only settle on pricing of the oil that they buy and sell, but also to hedge. And as a result, I'm going to have to dumb things down. But ultimately, they were trading in and out. Of course, speculators are trading in and out. Investment hedge funds and so on and so forth are trading in and out, and they needed to really kind of take the exposure off. So we had a massive dumping of the futures contracts, the forward futures contract month, and this decimated ETFs that track oil. It decimated leveraged ETFs that track oil, and the futures contract, which is what it's looking at, went negative because Cushing's, which is on the U.S. side, Cushing's, Oklahoma, is a massive oil. The words are eluding me, but ultimately it's an area where oil is stored. It's a massive storage facility, right, in Cushing's, Oklahoma. So theoretically, if you were a large institution, if you had the storage space, you could have technically taken these contracts and taken delivery of oil barrels. Okay, remember, we're not talking one barrel that you could put in your garage. No, like we're talking hundreds of barrels per one contract. Okay, one contract would represent 100 barrels of oil. So needless to say, you would need to have the licensing and a big facility to even be considered, right? And you would need it to be in proximity of Oklahoma to take delivery. So it's not like you or me could be doing this. But ultimately, that's what happened. You were, for that one single day, if you were to execute and you had the capacity, you had the licensing, you had everything there, you could have taken delivery of oil, barrels, hundreds and hundreds of barrels of oil, and gotten paid to do so. And wow, what a black swan event that would have been, and what an opportunity, of course, in hindsight. Right, but the reason it happened was because there was cost involved in storage. I remember these, offshore storage tankers and these storage ships just skyrocketing back then because all of a sudden they were in vogue. People needed to find out where are they going to store all this oil that no one really wants or needs. So those tankers went up like crazy in stock prices, right, in demand. So hopefully I've done some justice to kind of explain it. This isn't a thing where you could now be paid to fill up your car or take a delivery of a barrel or two and get paid for it. No, this was for large, oil producers, oil extractors, large institutions and companies in that business, and especially those that have the licensing and the facilities to take delivery. And on this specific day of April last year, someone could have paid someone else to take oil off their hands because there was too much of it. And as a counterparty, they could have gotten paid to take that oil off someone else's hands. Okay. And it was just that one day. I remember that day very, very well. I was driving when I got the notification on my phone. And yes, it's crazy. It's crazy how we remember life with certain events that occur.
Yeah, it was a wild day to say the least. All right, there was some chatter here about everybody's favorite stock right now, PLTR. What's going on with this? Obviously, it's like tech is starting to rebound, but PLTR seems to be kind of stalling here where it is. I know a lot of people have a position in this, myself included, and so kind of want to know what is going on here with PLTR.
Yeah, so this was a position that I talked about maybe over a month ago or so on the tech drop. I got in. I obviously didn't get in at the bottom, for so to speak, but I did scale in a couple times, and I have a position just to be clear. And this is more so a medium term plus trade, not only based on technicals but also fundamentals. Not because the fundamentals are the greatest or it's a great value or anything like that. Just more so that for the future, it can continue to grow its revenues, and I'll touch on that shortly. And because it's a very unique company in a niche or an area where the pretty much the government, the defense area, the defense branch of the government is its largest customer, right? And in fact, just this weekend, or I mean, just yesterday, I think, news broke that you know what they've secured over 90 to 95 million dollars of contracts, defense contracts from the U.S. government. So that is what revenue in its hands, right? So that is just something that released, I think, yesterday. So obviously markets aren't open, and we might see some movement, some action on Monday when markets do open. With that said, they have done well in terms of some of their cleaning up some of their debt, cleaning up some of their fundamentals. This company, remember, is a growth tech type of company. It's a very unique company because it operates in the defense space. Its customers are the NSA and the CIA and the federal Homeland Security. It's essentially many of these institutions of the U.S. government, and they rely on the data that Palantir provides them. Okay, so that's roughly in a nutshell what the company does. And as a technical standpoint, I think the 22 area is a great entry for those that haven't taken it. Even now, I think it's a great entry. I mean, who knows how things will go on Monday? But this is a company that I think has some upside. It doesn't make any money though at the end of the year, or it has revenue, of course, but doesn't make money at the end of the year. So just something to keep in mind of. It's not a fundamentally A plus company type of thing. So with that said, I continue to hold. We need Palantir to essentially turn the tide. I think what broke the back, like as I've said before, of this stock was that the founders and the CEOs and chairmen sold a significant portion of shares. And this is not uncommon when a company goes public. When it gets publicly listed, the founders and staff and the insiders want to sell their shares on a public market because the whole point of getting listed is to have that liquidity for people to enter and exit of their positions, right? So I'm not surprised by that, but when you mix that in with the large amounts of selling from insiders, mixed in with the NASDAQ and tech sector just dropping, it's what kind of like put a damper on the whole thing, right? So I'm still patient. I'm still waiting. I think this does have upside. The fact that it's held above the 2021 area is very solid.
Awesome. Thank you for that. Different Chris, not myself, wants to know what our thoughts on SDGR are for a long-term hold.
Yeah. Someone actually it's just funny because someone mentioned this stock to me maybe around this time last year. I think this is a good technical setup. I'm not the most familiar with the fundamentals of this company, although I have looked at it before. I think this is a good setup. This double bottom around the 60-ish area. It's great. And as you can see, all the moving averages that Chris has up are kind of converging here to this point. I would definitely see if you can clear above this 78 level, and maybe it can come back and bridge that gap back to near the 100 area. Okay, so this does look good for a technical setup. I personally, would not, if I were to take this trade, personally would not be comfortable carrying below $60 area. So something to consider for a long-term hold. Make sure that the technicals are there, which the technicals, like I said, do look good for long. Maybe you're already in, but the fundamentals are something you obviously that also factor in when you hold something for long-term. And I can't say that I know the company's fundamentals too well. So make sure you have a thesis, you have a plan, and you're aware of what's going on with the company.
Awesome. Thank you for that. Andrew wants to know if you have thoughts about starting a position on ARKX. It says a few members have taken the position already.
Yeah.
What are your thoughts?
Yeah, so ArcX recent ETF that just launched, as you can see, and quite a bullish move since it did launch or go, get listed. This is very speculative. This is, I mean, we know the ARC ETFs, Kathy Woods and their team, with different ARC funds and different kind of motifs for their funds. This one is solely based on exploration, space exploration. As it says in the name, it is very speculative. If you believe in that area, obviously it's going to hold stuff like Virgin Galactic and so on and so forth. Personally, I don't have a position. Personally, it's too speculative or new, and I can see why some people will want to take this and get in on this. But for me and my kind of style, not something I find personally appealing. Right. Again, that's just me. This goes based on many aspects. If someone believes in the holdings that this ETF holds, if someone believes in Kathy and her team, someone believes in the objective of this ETF, then sure, they have a case to take a position. But personally, you know what, I can't in good faith say that I am or have a position, and who knows, maybe in the future I might consider, but not right now.
Awesome. Thank you. All right. Aaron gave us probably one of the best descriptions or questions here. All right. So let me read this. MITK is an online ID verification company. This is a potential $10 billion sector. It has filled a gap from 7 days ago and a couple of hops on the last 3 days of the last week. It's on a longer term downtrend with all of the voter ID requirement talk, vaccination passport talk, and method of combating all online fraud. I believe it has tremendous upside. Looking at a $14.50 entry or waiting until the 50 moving average is tested at around 1582. Their fundamentals seem to be improving as well. It's also the only company that he has found that is public in this specific sector. Broadly speaking, it would be cybersecurity, however.
Yeah, it's a very well worded, very in-depth question. And you know what, Aaron, I actually find this to be pretty interesting, a pretty interesting company. Something, obviously is a very much of a growth-based company. You said already it has a very unique business in an area and in a time where, as we know, cybersecurity and verification of ID and identity and all this kind of stuff is very important. And of course, this is kind of the right sector for it to be in. I think it's looking good on the technicals. Again, don't ask me with the fundamentals. I haven't had a chance to look at this in fundamentals. But on the technicals alone, this looks good. Keep in mind that 200-day moving average, again, acting as a solid support over the last few days. So keep an eye on that. If it goes below that, I would kind of be a bit cautious holding it below that. But so far, so good. It does look like it can bridge that gap, right? Come back up. Wouldn't be surprised if it crosses that $16 area with the moves on Thursday and Wednesday. Okay. Hopefully that gives you some confidence in the company's technicals. I actually do really like that. I really like what you explained there and what the company does.
Yeah, that's awesome. That's probably the best explanation I've ever seen on webinar. So thank you for that. Another question here from Aaron. TRP is mainly a Canadian-based energy infrastructure company, but has pipes in all of North America. If oil makes a positive move Monday with the OPEC news based on the bullish move Thursday, it seems to have a longer-term resistance of about $50, approximately $3 per share.
Yep. This is a company we've known. I've traded many years. In fact, full disclosure, especially to those that know my portfolio holdings well, I have a couple $100,000 worth of TRP that I still hold. This is one of those. I mean, it's funny how Aaron mentioned it. I swear this is not rehearsed or contrived. It just happens to be. I mentioned that I have a significant portion of pipelines, and Aaron mentions TC Energy, TRP, which is a Canadian-based pipeline, right? Oil and natural gas producer pipeline, logistics company. So for me, I hold this for many reasons. One, because it's something that I'm comfortable holding. It's not going anywhere. It's something I've held traded in and out, but also held for longer term for many years. And as I've said, a couple $100,000 in this position individually alone. So I do like it. You're right. There is that kind of area of some resistance, so to speak, at around 50. I personally, for this kind of position, this kind of stock, this kind of company, I don't even really worry about kind of resistance area, so to speak. I am mostly in it for kind of seeing things through, giving it time. If it goes to 50, bounces back down a bit, fine. If it goes to 50, breaks above, great. The great thing about this company is it's a solid company, not going anywhere in an industry that's needed, required. It has massive operations scale. You can't just up and build a competitor to TRP, right, in your backyard. So, it has a wide moat. With that said, the company also has a very nice dividend, right? Dividend yield. I remember I cautioned that you don't buy a stock for the dividend. You don't buy a company because of the dividend alone. That's just a secondary measure of the company and what it does, and if it's operating efficiently, right? So it's great to have that dividend there as you hold it. I think it's like 6 or 7% dividend currently annualized. So I'm completely okay holding it, completely okay, doing covered calls on it. And you know what, generating that dividend plus any capital gains that it does have over the long run.
Awesome. Well, thank you for that. Guys, amazing questions tonight. Thank you, everybody, for showing up here to our live webinar. I really appreciate it. And Riz, just wanted to, obviously thank you for coming out and being part of this and giving us your insights. It's always a blessing to have you on the webinar so that, everybody can, reach out to you one-on-one almost.
Yeah, no, the pleasure is mine. Obviously, it's appreciated. Great job, everyone. Great work. Thank you for joining. Thank you for obviously your commitment and time. And of course, being a part of Elite. For those of you that are watching afterwards or the recording, whether you're an Elite or maybe you're not, I assure you, there's nothing like it on this planet. And of course, I hope, I hope, we can continue to go down this route and change the way people see markets, how they approach markets, and learn to look at it from a more methodical and more realistic probabilities approach. And of course, my way of candid transparency and openness hopefully leads people to joining us whenever that may be that's comfortable. And thank you again to everyone that have already been with us and continue to be with us. It's really appreciated. I appreciate all of you. I appreciate the support. It's fantastic. And keep up the great work. Keep at it. Hopefully markets do really well this Q2, not just April, this Q2, and maybe even the rest of the year.
Absolutely, guys. All right. Thank you, everybody, for coming out. And as always, we'll see you on Discord on Monday. Good night, everybody.